Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold continues to correct lower as the market unwinds some of the stagflationary risk that was priced in the past months. The de-escalation trend will likely remain intact until the first trade deal. The stagflationary pricing is what got gold to such high prices, and as we start to price out that risk, it's normal to see a correction, especially considering that long gold has been the most crowded trade. In the bigger picture, gold remains in an uptrend as real yields will likely continue to fall amid Fed easing, but in the short term, more positive news on the tariffs front should see more downside for gold as the market readjusts to new conditions. Now, the daily chart, we can see that gold broke out of the recent range to the downside as the market continues to reprice the stagflationary risk. From a risk management perspective, the buyers will have a better risk to reward setup around this previous high at 3,167 to position for further upside, while the sellers will look for a break lower to increase the bearish bets into the major trend line around the 3,100 level. On the 4-hour chart, we can see more clearly the breakout of the range between the 3,258 support and the 3,367 resistance. We now have this downward trend line defining the bearish momentum. The sellers will likely step in around the broken support and the trend line to position for further downside, while the sellers will want to see the price breaking higher to target the 3,367 level next. On the 1-hour chart, there's not much else we can add here, as the sellers will likely step in both at the broken support and the trend line, while the buyers will pile in at every break higher. These red lines define the average daily range for today. For the upcoming catalysts, today we get the latest US jobless claims figures and the US ISM manufacturing PMI. Tomorrow we conclude the week with the US NFP report.